Kas?
Kai susidūrė viens kitą pavairuoti šau.
O dabar žinutė, tavo nepraleiskite mūsų susitikimo 11 valandą per Zoom. Eik tu nahu, tu bent įsivaizduok, kiek čia žmonių pakviesta. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 6, 7 žmonės.
Įsijungčiau, bet uždengčiau kamerą.
Aš tai taip ir darysiu, kad tu galvoji. Dynas, Dyn Martin, tai mūsų Dynas. Bet jau pavardės su pavardė yra tokia Dyn Martin. Jamesas Smithas ar Artichen. Man rodo visus dalyvius.
Tai ką, jie ten veiks?
Bet kur va čia yra labai achujenas sutapimas turėti tas pačias pavardės ir vardus.
O tai ką daro?
Daugiau nieko. Aš paspaudžiau dalyviai. Va, matai, parodo, va, organizatorius ir kas pakviesta ir aš paspaudžiau ir man va rodo visus dalyvius. Štai Dynas, Jamesas. Eik, tu nahui prisijungi dėl darbardžių. Aha, so that's how we go to your country.
Kas?
Jamesas, na.
O ką, tu čia sakai, darbą neturi?
Na. Šoka kurva ir aš gaučiau ir jisai, man atrodo. Tai aš nesuprantu, tai koks tikslas šitos va viso dabar bus dalykų. Nelabai suprantu. Nes tai kaip supratau, tai čia ką jie darys? Tai čia ne dėl darbų siūlys. Tai bus kažkokia konferencija. Tai prie ko čia aš, ble?
Nežinau. Šiaip pasišnekys. Kažkaip.
Dūmai mano jau čia nusileidė.
Mineralinis vanduo su garšniais tau sako žingsnį. Svarbiausia, nepamirškime straukimų. Statom, apsidam į šaltuvą, užsikaisom, mes pirmiausia susirandam pilną pasitaikiusi snarglį, ta prasme vaiką. Kaip pėksos būtų gerai. Ir nusitaikom. Nusitaikykės į vidūną ir pataikė. Sąlyga sustabdyta. Plojimai. Sąlyga, gydytojai. Gerai, toliau. Kartelė. Kartelė. Nevertinę kampulę. Štaisiu. Nuvarom lęšį. Susirenam kitą. Reikia kartais išlaukti momento, kartais vaikus paėmė gilinti velnį. Nu, gaunasi, kad kartais norėdamas paskiepyti vaiką, paskiepį motiną. Kas čia buvo? Meningokokas. Pasakoma, 2, tai ne vienas. O Jėzau.
Gyvenimas kaip šaka, margas. Ir mums pasitaikė partrenkt žmogų.
Alisa, blėt, gerai, kad aš teisų neturiu.
O, žiūrėk, va. Čia trenkėsi, viskas gerai mašinai. Mašinai viskas gerai, viskas tvarko.
Jo.
Klausykit, kur jūs lakstot, ką? Kur jūs žiūrit, ką? Taigi čia gatvė, čia yra mašinom važiuoti.
Aš kebabą norėjau pasiimti kebabą.
Kebabą, tai va dabar guli kebabas.
Sutrukdė tarnybom dabar nuvažiuoti ten, kur buvo iškviesti. O jūs gal galite man padėti, visko gal.
Ne, jūs turit paskambinti dabar, mes negalim padėti. Ne,
mes to įvykį turim, tai ką jūs galvojate?
Ir ne tik mes dabar važiavom iškvietimą, jis turi dabar pasiskambinti savo ir išsikviesti pagalbą.
Sau pasiskambinti?
Va jūsų telefoną.
112. 112. Jo. Su šitą dieną. Šiaip jau mane partrenkia mašina.
Ant Tauro kalno, sakykit.
Ant Tauro kalno partrenkia. Aš kojinę jaučiu į galvą skauda.
Nesvarbu, kur atvažiuoti, sakykit, Tauro kalnas.
Tauro kalnas, tik prie jo. Aš važiuoju? Jo.
O, racija, palaukit, racija. Taip?
Aš atsiprašau, aš nenkiu.
Ne, mes negalim, mes dabar turim biškį problemų. Nu taip, turim savų problemų. Švietimas kažkoks ant Tauro kalno.
Čia mano, aš ką tik, šitas.
A, čia jūsų švietimas?
Tai ko jūs mus kviečiate, mesgi negalim?
Ne, mes tai negalim, mes...
Man pasakė, lauk, atvažiuos ekipažas.
Nu tai jūs žiūrėkit, o kaip jūs juda dabar?
Aš nežinau, aš dar turiu kojas.
Jūs turit, viskas gerai, čia pas jūs. Žiūrėkit, jūs ir batą turite.
Truputį ten va taip iš šono.
Jūs galite va taip truputį. Ne, neskubėkit, ramiai. O jūs galite, gal kaip elgtis galite. Va, kaip sakėt, kaip kebabas. Taip, su...
Thank you for everybody who's joined, first and foremost. Just to give a bit of a brief overview of RE HR Solutions, because this is a new division to the RE group. We've implemented this division to complement the existing services that we provide with the RE and Safe Hands. My background is as a HR, I'm an FCIPD HR director and run my own consultancy, and I've joined RE both from an internal HR director perspective and also then from a consultancy perspective with two areas of the HR consultancy, that sort of day-to-day total HR that people tend to think of primarily with HR consultancy, but also the strategic HR. So aligning business goals with people goals, and anything really from organizational design through to training for resilience and well-being, and then also maybe things you wouldn't necessarily associate, like continuous improvement and lean techniques. So so certainly a wide variety of offering that we can give. I'm not going to talk any more about that. I'm more than happy to have conversations with anybody that might be interested in the services that we provide. So I'm going to hand over to Helen and James. They're specialists in contractor compliance management, and they're going to cover the subject of IR35 for everybody this morning.
Thank you, Rachel.
Thank you very much, Rachel, and thank you for inviting us to talk to you all today about IR35, the changes that are coming in from April 2021, and how they will affect businesses. So first of all, let me just introduce both myself and Helen. Helen is a qualified chartered accountant with over 25 years experience. She heads up Orange Genie Accountancy, contractor specialist accountancy practice that looks after a team of 13 people and over 1,000 contractors. The Orange Genie Group specialises in looking after contractors and contingent workers. Helen is also the technical lead on delivering Orange Genie compliance projects, and she's supported by myself, James Davis. So I've been in the contractor market for over 10 years now, formerly a contractor accountant. My current role is Group Business Improvement Manager at Orange Genie Group, where I look after compliance and ensure that that remains at the heart of what we do, our processes and values. So why are we talking to you today about IR35? Well, we've got many years experience with thousands of contractors. We foster long-standing relationships with our recruitment partners and end clients, whom we've helped train and guided through previous legislative changes. And we have an extensive knowledge of IR35 from work with our client base. We work very closely with the FCSA, that is the Freelance and Contractor Services Association, a driving force in the industry, making sure compliance is at the top of the agenda. They're very good at lobbying HMRC, government, and hold roundtable events to test things like IR35 tools like CEST. And ultimately, compliance is core to what we do as a business. So I'm going to run through brief agenda of what we're going to do. We're going to look at IR35. We'll briefly cover what IR35 is, who it applies to, its effect, how it's assessed. We'll then move on and cover your obligations and responsibilities for when April 2021, which is this year, comes round. We'll give you some suggestions as to what you should be doing to prepare to. April 2021 or April 2020 as it was previously always seemed a very long time in the future. Obviously, it's now 2021. A lot's happened the last year, but it still takes many businesses by shock when you realise that this is happening in a matter of weeks rather than months, as it maybe used to be when it was on the agenda. So let's go briefly back to the beginning. There was previously a Friday to Monday culture, where employees would finish on a Friday, down tools, and then return back to the same company on a Monday, but now working through a limited company, expecting to take home more money. The reason this happened was favourable business rates on tax were introduced to encourage entrepreneurialism and to encourage small businesses in the late 90s. Individuals and contractors soon worked out that a very good way to take home more money was to incorporate as their own limited company, often known as personal service companies or PSC. When the cat was out of the bag on this, so to say, HMRC felt they needed a way to collect the tax they thought they were missing out on from those that were really disguised employees. And that's when IR35 was born. So what is IR35? Well, IR35 simply means Inland Revenue 35, which is the missive that this legislation was published on from HMRC. It's legislation designed to combat tax avoidance, where exactly that happens. A temporary worker claims to be running a business in their own right when they are no different to that of an employee of their end client. So in effect, disguised employment. IR35 looks at the hypothetical contract between the end client and worker and asks, is this person really acting like an employee of the end client, or are they, in business on their own account. That is with the trappings of a business. IR35 needs to be assessed on a contract by contract basis. So when does IR35 apply? When do we need to be wary about IR35? Well, IR35 applies where a contractor provides their services to an end client through an intermediary, and where if it wasn't for the intermediary, then they would be taxed as an employee. The diagram on your screen now explains the most common supply chains, and the red rings demonstrate who the intermediary is. In the first supply chain, the worker is provided via an umbrella company, which is technically an intermediary, but as full PAYE tax, national insurance contributions deducted, you do not need to worry about IR35 in relation to umbrella contractors. The same is true of a worker supplied via an agency through agency PAYE, as full taxes are paid at source. Where the contractor is provided by way of their PSC, or limited company, either directly with the business or via an agency, IR35 does apply. In the case of a worker providing services direct as a self-employed worker, there is no intermediary, and IR35 rules do not apply. You still have to be sure that these workers are genuinely self-employed, or you're at risk of incurring employer's national insurance contribution. Whilst the tests are similar to the IR35 tests, the IR35 legislation does not apply, so a formal status determination is not required. So what's the effect of IR35? The impact of IR35 can be significant. It dictates the way the worker can withdraw their funds from the company and affects their take-home pay. So outside of IR35 is in effect the box seat for contractors, as it's the most tax efficient way they can remove funds from their company. That is through a method of salary and dividends, usually a low salary and the remainder of their income from dividends, which has favourable tax rates. Inside of IR35, that is where the employee is deemed, where the contractor is deemed to be more of an employee. All income needs to be treated as if they were an employee. So that is with PAYE and national insurance deducted at source. The cost of getting assessment wrong can be costly, as HMRC will seek to charge for any underpaid tax and may impose penalties based on how they deem the situation to have occurred, be that deliberately or merely through lack of care and attention. So how is IR35 assessed?
Thank you, James. So IR35 is quite complicated. It's a grey area. The judges themselves in case law have had difficulties sometimes agreeing on how one particular area impacts their overall decision. And it is case law we're looking at in this situation. There is no statutory test to IR35, unfortunately. We can't give you a list of questions that if you answer yes to, you're definitely going to be outside. So we have to look at everything in the round. Case law has asked us to stand back and look at this holistically and really understand both what the written contract says and what's actually happening in reality in the working practices. It's important to understand that actually the working practices will weigh slightly more heavily than the written contract if the two aren't aligned. What you really need is working practices reflecting what the written contract terms say. But if they don't, then a written contract can be seen by the revenue and by the courts to have been a sham. So working practices are really, really important here. And going back to what James said earlier, what we're looking at is the hypothetical relationship, the contract, if you like, between the contractor and the end client. We ignore the agency, we ignore the umbrella in the middle. What we're looking at is what is really going on the ground between the end client and the contractor. Is that genuinely a business relationship that's happening, or is it really one of hidden employment? Okay, so the 4 tests that we use to assess IR35, 3 of them have been around since 1966, a very old employment law case, personal service control and mutuality of obligation. And the 4th one, business on their own account, a sort of integration with the business, has come along through what the judges have said in case law. I'll look at them briefly. I won't go into too much detail today, but personal service is really the idea of substitution. It's looking at when you engage the limited company, are you happy to engage that limited company and for them to send any representative that's capable of doing the work, or are you actually saying you're engaging that one particular individual and you want their services and their expertise? To be sure that a contract is outside IR35, there needs to be a right to substitution, a genuine right that you'll accept any representative from that limited company. if the original contractor or perhaps the first named contractor is unwilling or unable to come. And the contractor is responsible for finding that replacement and paying for them. Now, sometimes you'll hear people say, but they don't have anybody else work for their limited company, so they can't send a substitute. That doesn't matter. They will probably have contacts with other limited companies with contractors in them. And as long as they are able to subcontract that to another limited company, and they're still responsible for the quality of the work and for paying them, and the end client accepts them, then that is a genuine substitution. And that's what we really need in terms of being outside IR35. Moving on to control, we're looking at the what, where, when, and how. The where and the when can sometimes be quite neutral factors. It is not impossible to understand, to imagine a situation where a contractor has to go to a particular site during particular hours for security reasons, to have access to equipment. There are a whole host of reasons why that might happen. And in that case, then those factors tend to be fairly neutral in an IR35 decision. But what is important is what the contractor is doing and how they're doing it. Ideally, we're looking for contracts here where contractors are engaged to deliver a specific set of deliverables, where it's clear the service and the project that they've been engaged to undertake. And they're there to use their expertise because there's nobody else in the organisation that can perhaps do that work. So how they do it, they need autonomy over how to achieve what it is the end clients ask them to achieve. What they do should be down to them and applying their expertise. If we've got supervision, direction, elements of control, then we've got issues and we've got a relationship that could indicate employment rather than business to business relationship. Mutuality of obligation, well, that according to the revenue exists in every single relationship. If party X promises to do something for party Y and party Y pays for it, then they believe there's mutuality. There probably is, but what we're looking for is beyond that. It's that idea of a master-servant relationship, of basically the contractor having to do, being obliged to do the work that the end client is offering them, not being able to say, no, sorry, that's outside the contract, not being able to say, no, that's not a task I'm comfortable doing. So in the world of IR35, if somebody's to be found outside, we look to make sure that the work is for a specific period of time, that the contract ceases at the end of the project immediately, or that there's at least the ability to immediately terminate it when either party wants to. Notice periods aren't necessarily a good thing in this case. We don't want to see end clients being obliged to offer more work or contractors being obliged to accept it either during the contract or at the end of the contract. And ideally, we'd like to see contractors obviously being able to have multiple end clients and to run their businesses as they see fit, with contracts running at the same time. And then the last one that we look at now is the business in their own account. So as James has already said, we're looking for the trappings of somebody being in business. Do they have websites? Do they have their own business cards? Are they looking like they've basically been integrated into the end client's organisation? If from the outside you can't really tell the difference between your contractor and an employee sat alongside them, then that's not a good thing from an IR35 perspective. Everybody talks about the Christmas party. Are the contractors invited to the Christmas party? That in itself might not be a problem as long as you're asking your contractor to pay for his ticket to go to the Christmas party. But what we want to do is distinguish the treatment of contractors from employees to make sure that they're not being sucked into looking like just another employee. And that goes right back to the beginning, the reason why you've engaged the contractor in the first place. If you're engaging contractors because you need extra resource and you've already got permanent employees doing that role, you've already got a difficult argument in trying to explain why you've taken on somebody that you see to be outside IR35 if they're doing the identical role to an employee sat next to them. So we also look for things like financial risk. Has the contractor got their own insurance? Would they be made to put work right if they did something wrong at their own expense? Are they at risk of invoices being unpaid? All those kind of areas would support the idea that they're running a business on their own account. Okay, so how's IR35 developed? Well, when it was introduced in 2000, the responsibility for assessing IR35 status sat with the contractor. And that was the case for an awful long time. But the revenue felt over the years that there were too many contractors finding themselves outside IR35. They didn't genuinely believe that all of them were operating in this business to business relationship way with their end clients. They had their own problems, in-house problems. I think lots of people will probably remember especially the BBC cases with presenters, where there was a lot of press about people operating through limited companies. They were following the rules, you know, they were allowed to pay less tax by taking dividends, but perhaps they'd misjudged their position in the first place to find themselves in that outside IR35 position. So the government decided it was time to put the public sector right and introduce the off-payroll reforms in 2017 in the public sector. They made it clear at the beginning that that was a trial run for the private sector, and we are now where we are, heading rapidly towards April 2021, and the same rules will now be applying in the private sector, which will mean that in both sectors, contractors are no longer responsible for their IR35 status assessment, and it's down to the end clients to make sure they assess the contractors. So what does it mean? Well, as I've said, 6th of April 2021, any payments after that date will have to be assessed under the new rules by the end client. The end client will be responsible for determining the status unless they're small, and I'll come back to that in a minute. Whoever pays the PSC, the limited company, is known as the fee payer under the new rules, and they're liable to make sure that the correct tax is being deducted. So if a contract is found inside IR35, the new rules will expect PAYE and NIC to be deducted from the invoice value before it's paid to the limited company. And that does represent challenges for people. We'll come on to what happens if you're inside and other options a bit later. If they are caught by IR35, then effectively the contractor will need to have everything that he earns taxed as if it was PAYE. But unfortunately, he gains no employment rights. What we're talking about here when we're saying deemed employment is about tax law, not employment law. So unfortunately, it's the worst of both worlds. Pay more tax, gain no employment rights. And also, as it stands at the moment, a contractor can use up to 5, if he's found inside IR35 and running a limited company, he can use up to 5% of his turnover to cover costs of running that limited company. So professional advice from people like ourselves, accountants, tax advisors, that goes after April 2021 if he's found inside IR35. Just turning briefly back to the issue of small private end client. If an end client is deemed to be small, then the contractor retains the responsibility for assessing his or her own IR35 status. A word of caution, the criteria for being small look quite simple on the screen. You would just need to meet 2 out of 3 of those criteria. But I would urge that any end client that thinks they might be small just confirms that and seeks advice from their accountant. There are some quite complicated rules about what period you need to look at the turnover, what date you look at the balance sheet. And if you're part of a group and have associated companies, there are a whole host of rules on whether or not you belong to a small group and whether that still means you can class yourself as a small end client. So I would certainly urge caution and take some, as I say, some advice from your advisors as to whether or not you fall within that definition. So what does all this mean for you as end clients? Well, as I said, you're going to be responsible for assessing the IR35 status. You need to issue what is known as a status determination statement. There is some guidance from the revenue as to what that should look like and what it should contain. And there's certain information that must be in it. And you have to be able to demonstrate that you applied reasonable care in making that assessment. The legislation requires that you do that. We'll look a bit later on what reasonable care might look like. And you also mustn't make a blanket status determination. So what I mean by that is when you assess your contractors, both now, ready for April 2021, and in the future when you take people on, you need to be sure that you've looked at everybody as an individual. Blanket assessment would basically mean that you were doing one assessment for a core role within your organisation. Say you've got 10 people doing the same role, 10 contractors, and you assess that as a, if you like, a standalone, a role-based assessment, and decide that it applies to everybody without looking at their individual circumstances. The legislation says that that is not reasonable care and that you have to look at individual circumstances, because it is possible that something a particular contractor is doing in the way they operate will alter that decision. It's about making sure we understand how all parties are operating and that everybody is acting in an outside IR35 manner. The other thing you must do by April is to establish an appeals process. You have the ability to determine what you will and won't accept. So for instance, I've seen policies that say if you wish to appeal, that's fine, but we are not going to accept the determination of assessed. Because if you as an end client have decided that your methodology for assessing IR35 is to engage an expert or to use a commercial tool, you have already done your due diligence and you have perhaps decided that CEST is not the right way for you to go, the government's tool. If anybody's not sure what CEST is, it's a government's assessment tool for determining employment status. So you might not want to accept that in your appeals process. So you have to have an appeals process, but what I'm saying is you can determine what you will and won't accept in that. Okay, so why is it important that you do all of this and that you make sure you've demonstrated reasonable care and you followed the legislation? Well, it's important because if you don't, there are some pretty hefty, powerful provisions that take the debt transfer back through the supply chain. As it stands, if the revenue investigated a contractor's IR35 status and deemed that it had been incorrectly assessed and that additional tax and national insurance was due, they would start by looking at the contractor to collect the additional tax. But that's as long as everybody in the supply chain has followed what they were supposed to do in terms of the legislation. But as it stands, the legislation says that the first party in the supply chain that fails to follow their obligations will be where the revenue go to look to see whether or not they can collect that tax. So it is important, as the diagram shows, that if you're the end client, you flow that status determination down to the agency if there's one involved, and you try to, I would suggest you also, encourage them to make sure that you get confirmation they've flowed it down if there's any more agencies in the chain, and certainly it makes its way to the contractor in the PSC. Unfortunately, the revenue stance with this new legislation is that end clients have the best ability to ensure compliance. You are engaging the contractor, you want their services, and so they're kind of placing all of the obligation on you to make sure that that supply chain is following the rules and making sure that the right tax and national insurance is deducted depending on how you're engaging with the contractors. So obviously we've been through this with the public sector, and there are some lessons that we learned. The public sector had far less guidance and much shorter timeframes to implement this. And quite frankly, it was a mess. It was a horrible period. It was very difficult. They found it very hard to assess the statuses. They weren't fully resourced for it. They didn't have the knowledge. And blanket assessments were widespread, which I think is why this time in the April legislation, they've specifically kind of been banned, if you like. They're not seen to be reasonable care. That lack of knowledge, that fear of not knowing how to assess, kind of got the revenue what they wanted, because it made the end clients in the public sector push a lot of people into employment, either directly or through umbrella employment or agency PAYE. And it also led to lots of blanket assessments or the banning of the use of PSCs. Now, that might have taken the IR35 problem away for a lot of end clients because they didn't have to do the assessments, but it led them to much bigger problems. We saw loss of resource, loss of talent. We saw contracts stopping mid-programme that the public sector weren't able to finish. Probably one of the most ironic stories we had was the revenue not being able to finish a piece of software development because their contractors walked off site when they were deemed to be inside IR35. So the revenue, they suffered at the hands of their own rules in this case as well. So I would urge you to think carefully about making sure you do the assessments properly, making sure that you take advice and that you have the knowledge to make sure that you're confident in what you're doing, and that you think very carefully about not using PSCs, and certainly that you assess people individually. So that leads on to sort of, I've already probably covered some of this slide. There are some increased risks for you. There is going to be an increased cost to your business. There's no doubt about it. There will be additional administrative burden here, whether you decide to assess IR35 internally or whether you use external experts or whether you use one of the tools that I've mentioned already. I think you probably find that you'll have upward pressure on rates as well. It was very common and still is where people are found inside IR35 for the contractor to try to push for an increase in rate so that his take-home pay is not reduced by quite so much. You possibly face that loss of resource, the threat of loss of resource anyway, especially if you are deemed not to be perhaps handling the IR35 situation as openly and as transparently as perhaps you could. Certainly, we're seeing that the reputation of end clients who are open about this, they're engaging, they're collaborative, they're communicating with their contractors. That is making it far, far easier for them to continue to retain their talent and to be what we would probably call an end client of choice, where contractors want to go and engage with them because they feel like the process is being done fairly. Which kind of leads on to those opportunities that you can see on the screen, that, you know, as much as there are risks and as much as there is the potential to lose contractors, you also have the ability to do this right and therefore keep hold of your talent and also attract new talent in the future. I think one of the things to remember is that in the public sector, when contractors didn't like what was happening and they weren't happy with the way they were being treated or perceived to be how they perceived they were being treated, they ran to the private sector. And there were lots of contracts available for them. But obviously this time you've got the same rules in public and private. So there is nowhere really to run. If they want to be contracting and they want to continue using their limited companies, then there are less obvious opportunities out there, other options. But one area that they will potentially look to go to is to a small end client if it's available. If anybody works in an environment or in an industry where you've got small boutique companies growing up, perhaps, you know, people that have left large organizations that go and try and set up on their own, certainly in the early days, they're likely to be small. And some contractors find them attractive because they think they can retain the right to assess their own IR35 status. So you may find yourself competing with them to retain the talent. And it's just something to be wary of. Okay, so enough from me. James is going to now talk to you about what you perhaps should be doing now. Thank you, Helen.
So by now you should have a good understanding of what is expected from you and be aware of the complexities involved in assessing IR35. So the big question is now, what do I need to do? What should you be doing now? If you've not already started, you need to consider how you will approach IR35. You need to start now. Time is running out, and if you want to retain and protect the talent you already have, you actively need to be engaging on this topic. So as Helen mentioned, the risk to losing this talent is large. Begin by making sure you have an internal team that understand what is expected. Make sure that both senior management staff on the ground are aligned and understand the issues and your organization's approach to IR35. Arrange additional awareness training if necessary. Decide if you're going to tackle your responsibilities internally or will you engage with an IR35 expert. Collaboration and communication are key. Talk to your agency partners to find out what they're doing and work together to assess your contractors. You may be able to glean additional information for what they've done with their other clients, which can really, really benefit you. Engage with contractors early on. The more open and transparent the process, the better outcome for everybody. Decide how you will assess your current landscape in preparation for the forthcoming April deadline. Internally, externally, using an online tool such as Cest or engaging an expert advisor. And then once you've got past the line of April 2021, it doesn't stop there, unfortunately. You need to establish your post-2021 processes. Work out and understand how you're going to manage the contingent workforce that you use in a post-2021 environment. So those 4 stages: knowledge and training, collaboration and communication, assessing the current workforce, and then establishing your processes for post-April 2021. Now, we've mentioned the concept of reasonable care a couple of times already when determining the IR35 status of your workers. What does reasonable care mean? What's fair to say is reasonable care? Well, helpfully, there's no statutory definition, but HMRC have issued some guidance, which you can see on your screen. It is accepted that reasonable care may look different for 2 organisations in the light of their abilities, experience, and circumstances, is what they say. For example, HMRC expect a higher degree of care to be taken by a large multinational company with its own internal finance functions and HR departments than of a much smaller entity. So they will hold 2 different companies to differing standards. As I said, the extract on screen is an example of HMRC guidance and shows example of behaviour that HMRC would suggest would pass the reasonable care test. It's probably fairly obvious to everyone that you need to have a documented process with regards to IR35. But we just want to focus a little bit more on your options for seeking support in the assessment process in the context of reasonable care. So your options for assessing of IR35 can be broken down into three, really: use of experts, use of the CESS tool, and use of commercial tools. Traditionally, IR35 assessments were carried out by employment law specialists. They would apply the case law and consider each contract and set of working conditions manually. Whilst bespoke, tailored and individualised, this process can be lengthy and not best suited to situations where you're assessing large volumes of contractors. Engaging with an expert directly would constitute reasonable care. Of the three, it's probably the most expensive. Onto the CESS tool. HMRC created their CESS tool, which stands for Check Employment Status Tool, to help end clients make the IR35 decision themselves. HMRC state that using their free CESS tool will be deemed as taking reasonable care, and that they will stand by the test results. For these reasons, many end clients do choose to use CESS in their assessments. However, we would urge some caution in this route. It is hard to design an online tool that does something that judges themselves find difficult to do in court, and CESS notoriously excludes the concept of mutuality of obligation from its questions, which is somewhat surprising, as over recent years, this has been a strong indicator in case law of an IR35 status. CESS is also linear in its design. Whilst it now asks more questions than when it first appeared, it makes a decision on the pass or fail of one status indicator, when in fact, case law looks at everything in the round. There are now more commercially available tools. They ask many more questions and assess individual contractors on a case-by-case basis, but can also indicate to end clients where the issues lie and the potential impact of the assessments. They tend also to have experts supporting them to look at grey areas. A reasonable care approach to IR35 assessment would combine a thorough assessment tool with a level of human oversight. So you have the tool at one stage, but to put colour onto those grey areas, you engage with human experts as well. Getting ready for April 2021 is only part of the journey. As we said, if you wish to continue to engage with contractors, you need to establish your business as usual approach to assessing IR35. Indeed, the HMRC guidance on reasonable care suggests that ongoing monitoring of the contract and regular assessments of your processes are expected. Many end clients find it useful to establish a policy that defines when engaging a contractor is the right thing to do. By defining what a contractor can and cannot be used for, can help mitigate the risk of an incorrect IR35 status. For instance, a contractor asked to cover maternity leave is unlikely ever to be found outside of IR35, as they are covering a permanent position. So in that case, or a similar case, the appropriate appointment would be a fixed term contract option. Establishing your approach to IR35 and appeals in a written policy achieves two things. It provides clarity to all involved and a transparency from the initial stages of advertising a resource need to that of appointing the contractor. It also provides a framework, along with the procurement policy, for you to be able to audit your processes to ensure reasonable care is maintained throughout. And finally, a contingent worker policy. Think of this as the staff handbook for non-employees. A contingent worker code provides clear structure to the engagement with your contractors. The policy should establish how the parties will engage with each other throughout the assignment and can cover such areas such as use of email accounts, office space, gifts and corporate cards, even the most thought out thing, the Christmas party. Your IR35 team can work very hard to ensure that the contracts are IR35 friendly and can set out working practices that can support an outside position. But unless your staff on the ground know what it means to engage with a contractor and that they are clear on how that differs from interacting with an employee, your outside of IR35 status may be under threat. Finally, you need to be clear as to how you will engage with contractors found to be inside of IR35. And I'll hand back to Helen, who will talk through the engagement options available to you.
Thank you, James. So as I said, inevitably, I suspect some contractors are going to be found inside IR35 at most organisations. And so you'll need to decide how you engage with them, because we're pretty sure you're still going to want to be able to use that resource. There are 4 recognised mainstream methods that we would say are legitimate. There's plenty of options out there that perhaps we would urge against, loan schemes and various other offerings from different organisations. But I'm going to concentrate on the 4 that are recognised methods. Three of them are employment models: the umbrella employment, agency PAYE, and obviously direct employment with the end client yourselves. And then there's the fee payer option, which would still allow the limited company to exist and to operate in an inside IR35 position. I'll start. I'm not going to focus on direct employment because I'm sure that most of you already understand what that means and your obligations and your commitments. So we'll start with agency PAYE. Obviously, in this situation, what would happen is that the contractor would be engaged on separate assignments, separate engagements each time they had a contract to work at the end client. The worker has some limited employment rights whilst working through agency PAYE, but there's no engagement between assignments, so they have no employment rights between assignments. The contractor would have his tax and NI deducted at source, so you've got no concerns over IR35, but it is probable that there will need to be an uplift in the rate because obviously the contractor rate then needs to have be supplemented so that the agency margin and the cost of employment are also covered. How much that uplift is, this is what I referred to earlier. There is pressure on rates because the contractor is trying to make sure that he doesn't take home less money, but equally, obviously, there's the cost of employment that then needs to be factored in for you as the end client. The other alternative is umbrella employment. In this situation, obviously, you're still outsourcing your payroll and your employment to another organisation, to a third party. The contractor still has tax and NI deducted at source, so no IR35 implications. But this time, the contractor has continuity of employment. There's an overarching contract in place, which means he remains employed between assignments. It also means that if he has multiple assignments at different end clients, that can all be combined through one employment with the umbrella organisation. So he receives one pay slip a week or a month, depending on how he's paid, which does help with things like mortgages, references, credit terms, that kind of thing. So that's a second alternative. And then the third alternative that I mentioned, or the one that's not the employment model, the fee payer model, this allows the contractor to retain their limited company and they issue invoices to the agency if it's involved or direct to the end client if there's no agency. Now, the fee payer model would require that party that's paying that invoice to make sure that tax and NI are deducted from the invoice value at source before the contractor is paid. This proved a really, really unpopular model in the public sector. In fact, we think it was probably designed to be so complex and difficult that people wouldn't take it up. Because at the end of the day, if the revenue pushed people into employment, agency PAYE or umbrella employment, they're certain they're getting their tax and their national insurance fairly quickly, every month, regularly deducted at source. The difficulty with this model is that most organisations will have finance departments structured in such a way that they will have purchase ledger team who will receive the invoice from the contractor because he's on the system as a supplier of services. But then they're obliged to deduct tax and national insurance from that invoice value and report it through an RTI, through a payroll report. And there are, to my knowledge, no accounting systems that at the moment readily reconcile a purchase ledger invoice to an employment transaction through a payroll system. So for both the fee payer and the end client, fee payer and the contractor, this is a very complex way of dealing with things in terms of the reporting in the accounts. And you also have to remember that the contractor would be paying tax on the basis of being employed, but he won't be receiving any employment rights. And because all the money that's being paid into the limited company has been taxed as payroll and then paid to the contractor as payroll, there is no money left in the company for the contractor to cover things like his tax advice and his accountant's bill. And so therefore he's effectively funding his limited company out of his own tax income. So it really is an unattractive solution to being inside IR35. Very, very occasionally we have somebody who is so attached to the idea of being a director of his own company and wants to continue with his limited company that he wants somebody to apply this model, but it is very, very rare. And the most common solutions to being inside IR35 are direct employment, agency PAYE or umbrella. Okay, so we've spoken a lot today. That's it from us now. Rachel, do we have time for a few general questions if there are any? If not, we're happy to offer some one-to-one slots with people. Our contact details are on the screen, and we're happy to sort of spend 10-15 minutes individually with people at a later date, just talking through, you know, any concerns you've got, any other questions, and how we can perhaps help further.
Yeah, I think that's probably the easiest thing. I think most people have sort of specific scenarios that they'll want to have a conversation about. So, you know, that invitation is open to anybody on here who would like to either get in contact with Helen and James direct, or certainly through me. I just wanted to end things off by saying thank you, really. It's great to be able to do a collaborated webinar with people like Helen and James, who are really experts in their field. This IR35, there are some real complexities to it, and I think lots of companies are probably not even aware that it will actually affect them for certain reasons. And you've managed to explain it in what I feel is a succinct way, so thank you for that. Just to end things off, we as a business, HR Solutions, we are looking at doing more webinars and lots of blogs over the next few months, so look out for those. We'll contact you if you're happy for us to do so, to let you know when those are going on. We really want to provide our customers with as much information on relevant topics as possible, in line with our overriding company goal of expecting more from us. So yeah, we'll keep you posted on that. So thanks very much for your attendance.
Thank you.
Thank you, everyone.
Thanks. Bye.
Bye.
Thank you. Bye.